traders, Gary Wagner here. After 1 o'clock in Honolulu, after 7 o'clock in New York on Thursday, June the 10th, 2021, and this is the daily report for gold and silver. We had both gold and silver move higher following the Consumer Price Index report released today, which showed an uptick of about 0.6%, taking seasonally adjusted inflation to the highest point in 13 years at 5%. The question is, what is temporary and what is going to be sustainable in terms of the rises in goods and services? And that really will have a great influence as to where gold and silver pricing go to. Gold did close above 1900. The question is, will it sustain that? That's what we'll talk about during the show, which begins now. Interesting action in the financial markets with the CPI report coming out this morning. Gold was actually trading to a low of $1,871.80 before recovering after those numbers came out. It is currently printing at $1901.30, putting it up $5.80 on the day. Today's gain in gold and silver had little to do with dollar weakness. Now, the dollar was off by 0.07%, a fractional decline on the day at 90.06. But considering that gold was up 0.3%, we can see that the majority of today's gains were definitely based upon buyers bidding the precious yellow metal higher. This first chart that we are looking at is a standard candlestick chart of August gold. As you can see, we are trading in Australia. 1901.60 is the current print. It is up a couple of dollars from the close in New York, but still hovering precariously close to 1900. While it did close above that, the question is whether or not that will be a sustained area, because we can see that we are still most definitely right at the top of the trading range in terms of the band of resistance we have recently seen. And for that reason, we want to give it a day or so to see if it moves back below 1900 or if 1900 can become the area of support. It is trading well above the 200-day moving average and has maintained that price point for the better part of the last 3 trading weeks, at least since the middle of May. We also have to note that the golden cross that occurred between the shorter-term 50-day moving average above the 100-day moving average is significant. Now the question is, to get into alignment, we most definitely have to have a couple other things happen. The first thing is that the 50-day will first cross above the 200, and that would be followed by the 100-day. If that was to occur, that would pull our technical indicators into full bullish alignment. The 15-minute area chart definitely illustrates the activity that came in just prior to the report, which was very flat. The lows came in right before the report was released, and once released, we really had a steady uptick off of the lows of 1891 up to current pricing at 1901.30. It certainly was nothing like the reaction from the ADP report and the following day's Labor Department report that really sent volatility into the market. We would much rather see this type of rise. This last chart we're looking at in gold contains a simple Fibonacci retracement beginning from the most recent high, an all-time record high at 2088, down to the double bottom that occurred in March and April. When we do that, what we can see is that the 50% level does represent very solid support. We have a cluster of data right in this area. Although we've gone through it on a couple of occasions, we, for the most part, over the last week and a half, have closed above that price point. At the same time, above 1900, we're looking at 1931 is a potential level of resistance, assuming that we can effectively begin to trade above $1,900 per ounce. Currently, we will remain flat, but if we have a strong indication that $1,900 per ounce is becoming support, we will look to enter a gold trade from the long side. With these most recent CPI numbers, silver also had a pretty respectable gain, up about 13 cents, almost a 0.5% gain, but over $28, $28.13. It is something that we will look at, but we still want to meet a couple of parameters, which we will discuss when we pull up a chart. And traders, the parameters that I am talking about to take a serious look at silver is to break above this narrow and defined range that has really troubled silver since about the first week of May. While we closed near the upper end of the range, we have not been able to see silver effectively close above $28.37. That is the 23.6% Fibonacci retracement, and that is the area that I would like to see on a closing basis sustained, and that would trigger a buy signal in silver. For right now, we remain flat with no active trades in silver. Copper futures are currently at $4.49, a slight decline on the day. What is most impressive is when we look at the low today, $4.44 per pound, which is very, very close to the 50-day average. The 50-day moving average seems to be the strongest indicator of support in this industrial metal. Unquestionably, copper has been in a corrective period since hitting the all-time record high at $487.5 per pound. That occurred right on this candle here, which came in the first week of May. However, the one thing I find most impressive about copper in terms of the technical indicators is this long-term stance above the 50-day moving average, and the fact that on multiple occasions, including the most recent action, that has been a strong area of support. In fact, it's been a strong area of support for this entire year and the better part of last year, since March of last year. We have one position at $4.55 per pound, and the other one at $4.47 per pound. Maintain your current stop, maintain your current positions in copper. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.